decades. Caroline Woods joins us from New York to take a look at some of the tech support in today's session. We did talk some of the Microsoft earlier, but I feel like it's worth coming back to again, just because when you've got that type of dividend and buyback support, you've got a pretty good pillar under the market here this morning, Caroline.
Yeah, and it's giving a nice pop to Microsoft and to the overall market. Microsoft shares up about 1.6% right now because they're giving money back to shareholders. As you discussed, the tech giant increased its quarterly dividend by nearly 11%, 10.7% to be exact, to 83 cents per share. The new dividend is payable on December 12th. The company also approved a new $60 billion share repurchase program, which has no expiration date and may be terminated at any time. And also, yesterday announced the next wave of Copilot AI features. There's Copilot in Excel, which you can program with natural language, not coding. There's other AI-enabled features for PowerPoint, Outlook, Word, OneDrive, and Teams. And also introduced the Copilot agents or AI assistants that can be used to automate certain business tasks. I could certainly use an AI assistant as I navigate Outlook and other Microsoft programs. I still can't seem to, I think I'll always be a Google girl. But shares of Microsoft up about 1.5% right now. They're up about 16% year to date, trading about 6.5% away from the highs. And as you mentioned, the rest of the Mag 7 higher, aside from Apple, still under a little bit of pressure.
Okay. Yeah, Apple been kind of flailing a little bit, but maybe just normalizing somewhat. It's kind of like a day-by-day story. Which Mag 7 company steals the spotlight outside of earnings season today? That's definitely going to be Microsoft. Pretty nice little pop. Chart's looking pretty good now, getting closer to $440. The other tech company getting some love this morning is Analog Devices, Citi's top pick in semiconductors. One we hit on earnings, we do talk about a bit, but also generally just doesn't really rank in like the top of the tier chip conversation a lot. So that's where I thought this note was pretty interesting.
Yes, and Analog Devices has been out of favor in September. Shares are down about 3% in September, but in favor at Citi. Citi said Analog Devices is its top pick in semiconductor, says it has lower downside risk in autos versus other analog names after announcing earnings late last month. So Citi has a buy rating and a $265 price target on shares. It's currently trading at $228, so more than 15% upside from current levels with that price target. Analog Devices, although out of favor this month, is up 15% year to date, up about 27% over the past 1 year, and trading it's about 6.5% away from the highs. I will say more than 60% of analysts rate it as a buy. So this analyst over at Citi in the majority there. The median price target is $257. So Citi's $265 price target is higher than the median, but the street high is $295 over at Wolfe Research. Now, Citi also named some of its other top chip picks for AI, Broadcom and AMD, although we know Apple is Citi's top AI play overall. And then Citi, in terms of other chips, also has, or chip semiconductor stocks, I should say, also has a buy rating on Micron, Microchip, and Texas Instruments. So seeing, some strength across the board. I will say Broadcom and now AMD back in positive territory, but Broadcom did turn negative just a second ago. But overall, we're seeing some strength in chip stocks today. Analog Devices with a notable 2% gain.
Yeah, pretty nice little pop. New leaders maybe can be the story of a new breakout in the stock market. I think that's what a lot of folks are hoping for. So I'm starting to see some of that from the analyst talk as well. They're kind of looking for hidden gems, underappreciated stories. I mean, Intel's going to have another pretty good, kind of tone in it after, yesterday, 2.5%. Another decent move there for Intel. I don't want to get too hung up on Intel, but the idea that there's going to be other stuff maybe works very well to invigorate the bulls, to see other options on the table. Let's talk Qualcomm though for a sec, because with some of the Apple nerves, we have seen a few of their suppliers, I don't want to say suffer, but kind of struggle the last few days. What's JPMorgan saying in this price target cut for Qualcomm?
Well, Apple is a factor, but more so Apple insourcing versus any weak demand for Apple. But in terms of Qualcomm, shares are up 1.2% right now. JPMorgan is still bullish on shares of Apple, but is scaling back stock price expectations. Still sees growth opportunities, but says some headwinds are on the horizon. So they lowered their price target for Qualcomm to $210 per share from $230, kept an overweight rating on shares. So that new price target still implies more than 20% upside, about 24% upside from current levels. JPMorgan thinks the upcoming year is really likely to be key for Qualcomm, says there could be some displacement of revenue from Apple's insourcing of the modem. There's an increased likelihood of that. And says while growth opportunities for Qualcomm remain substantial, investors will look for a clearer understanding of earnings power, incorporating the headwinds from the loss of Apple revenue, which might lead to an overhang on stocks. So still believes there are multiple reasons to like Qualcomm in the longer term, so sticking with that overweight rating, but just kind of scaling back those price target expectations. As for how that stacks up on the street, the lowered price target is still higher than the median price target of $207, only by $3 a share, but the high on the street is $270, so there's more bullish than JPMorgan out there. 65% of analysts have a buy rating on Qualcomm. Shares don't seem to be impacted by that price target reduction, though. They're up about 1% today.
Okay. Pretty big unwind of Qualcomm from the highs. Definitely one I think worth watching. Is looking a little bit soft relative to others. So important, I think, to kind of note when some of these analysts shave down their expectations, especially when so many have been so bullish. It's still bullish, but it does, make a difference. $20 on a 210 versus 230. So it's a pretty notable revision. Thanks, Caroline. Appreciate it.